Tax planning, holistic, which you just realized is a term. In our world, holistic means over everything. You see everything, see the big picture, in order to make good decisions. When you do tax planning, right? We're talking about tax prep, everybody. We're talking about tax planning, different matter. When you do tax planning, is it important for you to see everything, or do you just make decisions on the little chunks that you see?
No, you definitely want to see everything overall. I mean, anybody's financial picture, tax picture, they go hand in hand. I don't think that anybody could really make a financial decision in any way, shape, or form without having some sort of effect on their taxes one way or another.
Absolutely. And I had mentioned this on a previous episode of we don't just get clients that we can see one little sliver and make a decision on. One, because that's liably bad for us. But two, I can't really make a good decision for you if I don't see the picture. And a lot of that picture comes into tax planning. So on your side of the world, how important is it for someone to do tax planning? Specifically a business owner, but really anyone. How important is tax planning in the whole big picture?
Oh, it's huge. Absolutely huge. I mean, if you sit back and think about what is one of the single biggest expenses of your year. I mean, most people gravitate towards their house. But if those ratios are kind of in line with your income, typically speaking, it's taxes. And taxes can be 40, sometimes even 50% for those upper people in those tax brackets. So you definitely have to look at the whole picture, and tax planning is crucial. Nobody wants to go at the end of the year and all of a sudden be like, hey, I owe this large tax liability that I had no idea was going to happen. So I always stress to clients when working with them that tax planning is the single biggest piece of their entire year. Taxes can absolutely, strong arm a small business in every way, shape, or form. So absolutely have to be proactive about that and make sure that you have a plan that's laid out, well in advance, and not just, once the end of the year turns, there is actually nothing you can do. I mean, you got a couple IRA adjustments if you want, right. But once the end of that calendar year flips over, it is what it is. You're kind of stuck.
So I think a big piece you said there was proactive over reactive. Mm-hmm. I believe most of the society just reacts to taxes, right? They just do tax prep. Like, do they do their tax returns? And at that point, like you just said, it's too late. So throughout the year, what's a good point for businesses to do for tax planning? What do you do for them? But also, if they are not working with you, what is some important pieces for tax planning during the year?
I mean, for people that I don't work with, we'll just start with the easy one. For people that I don't work with, just keeping a handle on your income and expenses on a monthly basis is actually key. If you see that your business is making money, which is the goal of every business that we work with, ideally, make sure that you are communicating that with somebody so that you have some sort of plan. Again, people don't even really know their revenue and their expenses. A lot of people operate by the seat of their pants, aka, oh, my bank account has money in it, so all the world is good. Right. But that can really give you a very distorted picture of what your actual tax will look like at the end of the year. So for my clients, we definitely take a proactive approach. Every business owner that I have minimum meets with me twice a year. So we'll start to roll out those plans and strategies in the June, July, kind of August area, where we sit down and really go through your numbers, really kind of come up with a game plan as to what we could do here, there, versus what happens for the rest of the year. So they have some options to work with, and they have it in the back of their mind. And what that does is it gives them a full 6 months to really execute that plan, decide if they really need a piece of equipment, decide if they really want to put stuff away for retirement. You have options at that point. The second time that we'll touch base is in November, not towards the end of the year, but just enough time yet where we can still make a decision either way. For the most part, we're wrapping up our plans, making sure that what we projected out in June is what in fact happened. If it is, then we're deciding when we want to put some money here, we want to buy things here, kind of executing those I wouldn't call them last minute, but executing those fine details and then really completing the plan at that point.
So you're saying that a business owner basically by November should know what their taxes are going to be unless December decides to just blow up one way or another. They already know going into the next year. So it allows them to actually plan ahead, as opposed to what typically happens is they'll get all that. And we're talking about March, April. They still can't figure it out and maybe have to extend into June. And now look at where you're at from last year going into next year.
Well, you're very true. So not proactive approach, but basically puts you on a reactive state of mind. And even if you, I think as you extend, and you were referring to tax season, right?
Correct.
Your taxes are due April 15th, whether you extend or not. That's a misconception that people have too, is, I can just file an extension and pay later. No, it's an extension of time to file, not an extension of time to pay. So if you end up owing in June or July, whenever you do your taxes, you will have penalties because tax was due April 15th. So you just can't go into the beginning of the year not knowing what's going to happen. You can't really make any adjustments. There's no way to go back in time and spend money. So I don't understand how to do it any other way, which is why my clients, I guess, do it the way that we do it here. But you just can't be reactive when it comes to taxes because they will get you every time.
Every time. And if they don't that time, they'll find a way. They'll find a way. So within, give me, if you can, if off the top of your head, obviously, give an example of probably more like a new client or something that's been in more of that reactive space, came with you and is more proactive. What would be an example of either tax due or things that you changed in their business or strategy from being reactive to proactive? Did you save them a bunch? Did they able to make more? Kind of give an example if you could.
I mean, typically when I look at a client, these are just rough percentages and trying to be a little bit on the conservative side because obviously we're on the air. Can't necessarily say we can promise the moon, the stars.
We promised you $1 million in savings and credits.
But I would say typically we're able to knock off probably 50% of their tax liability year over year compared to somebody else. I mean, we have strategies across the board for very, very high end all the way down to, I guess I'll call it as normal people. So I've got strategies to fit anybody's bucket, anybody's situation. And there's definitely things that we can do. But I guess you asked for an example. Worked with a couple owners the last 3 or 4 weeks, and came to me, and we'll just kind of use, again, rough numbers. I think their tax liability was going to hover right around $100,000 all in. We got a property in their name. They were able to utilize some real estate strategies, and through doing some cost segregation stuff and some other strategies as far as auto, kids, the whole thing, because some of those things we'll get into in here a little bit, but able to slash that in half. So it's really got to think outside the box for people and not just look at their current situation and say, well, based on what I'm seeing here, we can't really do anything. There are ways that we can do something, even for somebody that has just a W-2. Do have a couple of those strategies. They're a little bit more limited than your business owners are, but at the end of the day, there still are strategies available for just about everybody at every level.
Why is it that those strategies aren't widely known? Why is it that most people aren't doing them? And why aren't, CPAs taking that more? Everyone says aggressive. It's not really aggressive. It's outside the box ideas inside the tax code. Why aren't those being done across the board?
Good question. Obviously don't want to negatively talk about anybody, but I would just kind of say my profession in general is a little bit on the lazy side. They're just not proactive. I think there's an old school mindset that everything happens in that first 4 months of the year. And I guess I'm still shocked to this day. Been doing this 15 years and still shocked that clients come to me and they're like, we talk to our guy or gal one time a year. And that still baffles me because when you're talking to them one time a year, it means you're just filing your return. And there's really nothing that you can do at that point to really change a lot. So I don't understand what they're doing besides just filing that return. So the IRS is not going to throw out a book on how to maximize our tax.
Shocker.
Yeah,
Game
just
plan. They're just not going to get the game plan over.
Yeah, here's a playbook and how to minimize all of your returns.
It's fine.
That's not out there. You're going to have to do your research. You're going to have to do your homework. You have to listen to other people in the industry, take your classes, do everything you can to figure out the different areas that are out there. And, I subscribe to groups. I'm part of a bigger community that vets tax strategies. They'll throw some new ones out there. It goes through the community. It's looked at by former IRS agents, CPAs that have been doing this a long time, legal, and they really do tear them apart. And by the time that the strategy is ready to roll out to everyone, it has literally gone through the ringer. And so it's tried and tested. So that's been a great addition to the tool belt in the last year. Really allowed me to go after some different strategies that I didn't know were available then. And again, that's because they don't put these out there and say, hey, this is what it is. Somebody came up with a strategy based off of this particular point in the tax code, and we're able to utilize it and develop it.
So you're saying that not all accountants wear, like the sleeves with the pockets and are all nerd looking? Is that what you're saying? They're not all like that?
Not everyone.
Not
of us.
everyone?
Not everyone.
Oh, I guess that's a misconception because that's all I envision. Except for, seeing you dress up every day, which is a new fad thing that we're dealing with.
I got to try to outdo you once in a while.
Well, it's tough. Life's tough. Is there any other misconceptions that you can think of aside from, the whole, if you file, regardless when you file, your taxes are due. Is there any others that come top of mind?
About tax planning in general? I guess probably one of the most frustrating, I guess we'll call it, it's not a strategy, but some people call it a strategy, is, my prior CPA told me just to spend everything into my bank account and we'll be good for the year. I think that's terrible advice. Absolutely terrible advice. One, not everything that you spend in that bank account is probably deductible, so we're still going to have a little bit left. But two, I will never be that CPA that advises my clients that, hey, if you're getting down to the last 100,000 of taxable income, do you really want to spend 100,000 to save 10, maybe 15,000 in taxes? Now, I get taxes suck. I hate paying them worse than anybody that I know. But at the end of the day, would you rather have the 85 cents left over, or would you rather have some nice shiny toys that you spent $100K on to wipe out that 15? So that's probably the most frustrating thing that I get. And, I'm not here to make myself look good. I'm here to help my clients not only now, but in the future. And sure, if you don't want to pay taxes, I'll give you lots of things you can spend it on. We can go out and we can wipe them out. I totally get that. But if we're trying to build wealth for the future, and I think that every business owner or person out there would like to retire someday, that's going to take some wealth at the end of the day. And if you spent it on toys, well, now you're going to go to retire and all you have is a bunch of old toys.
Old toys that are most likely broke.
Yes, that you're not going to be able to do anything with. So that's the type of discussions and decisions that I put in front of my clients. And I'll advise you one way or another. But my personal opinion, and I do this for myself, I do the same thing I do for myself for everybody, is at some point, taxes are a part of it, and we manage taxes. We don't try to 100% eliminate them, because you do have to spend a lot of money to eliminate taxes. So we manage them down to a good percentage, and we keep that percentage year after year. And as long as we are proactive with tax planning on a yearly basis, I am able to keep your taxes very, very small relative to your whole picture that you have going on. And that's what I would call effective tax managing for now and for the future.
Absolutely. Love it. I love it. Before we get into the top 3 strategies that we're going to speak about today, and those that are listening, we'll be doing this periodically throughout the year too, with different strategies that we want to highlight at different times of the year. But so someone now's listened to this and they're like, ooh, I need to work with somebody, right? When's a good time for someone to try to hire, a new tax planner or CPA? Is it now? Is it the first quarter? Is it the summer? When is the right time for someone to hire somebody?
ASAP. Not necessarily a time of the year. I would say that, get on it as soon as possible. There is nothing wrong with having a conversation and saying, you know what, we're good for where we are at the moment. Let's connect in the next 4 months or something like that. Just getting that relationship going, getting on their radar, because I mean, we're all busy. We have a lot of stuff going on. Our years go by way too fast, and just getting on somebody's radar and getting to be proactive of, you know, hey, when's a good time to reach out to you if now is, because we have some dead times. I mean, there are, but when you getting on somebody's radar and just being proactive, I would obviously start that, you know, right away, as soon as possible. There's not a particular time of the year that's better. As you get closer to the end of the year, you run into less and less options that are available. So the sooner the better is all I can say.
Absolutely. And so, you know, the holistic approach that you take, that we take, and looking at everything big picture, tax planning throughout the year. If someone was, you know, interviewing other accountants, how would they know by talking to someone if they have that mindset like you? How would someone know? Like, how would there questions? Would you be able to ask them strategies? How would someone know if they have the right person in terms of that big picture?
I would say if you're sitting with somebody and you're discussing your situation, are you hearing things that you've never heard before? Is there things that can be done differently? And, you know, maybe sometimes there's not. There's not always things that you can 100% do. It's not something that applies across the board. You know, the more complex your tax return is, the more opportunities there are for savings. The simpler, obviously, you're going to run into more hurdles with what you can and cannot do. So if they're not throwing out any sort of ideas that are different from what you've heard, or then I would probably say that you're not in the right spot. Like, again, your tax situation could be so simple, maybe there aren't, but is there ways to enhance that situation? Can we get you into other things? Can we expand it? I've come up with lots of, I guess, quote unquote, plans over the years for people to get into investments or get out there and do a flip with a friend, or you know somebody that does flips. Hey, can I invest with you? All that stuff gets us complexity in those returns, and that opens up opportunities. So just because a situation might be simple, things that you should be hearing are definitely outside the box, forward thinking. Maybe not now's the right time, but here's what we can do long term to get you into a better situation. So I would guess you'd want to hear more of those types of conversations.
Obviously, first is make sure they're personable and you can relate to them, work with them, right? I mean, obviously, if you can't do that, let's not go to number two. So if you have trust in that person, then number two, strategies. And then I would say probably number three, or above all of those, is you have time. Go interview multiple. Like, don't just get stuck in, pigeonhole yourself in. Make sure you're interviewing and finding the right one.
Absolutely.
Find the right one. So now we get to the fun part. This is the fun part. This is the part that all the TikToks and shorts and stuff blow up always, because this is the strategies that most people either do know about or haven't heard of. So we're not going to start with number one, because I believe that's the best one, or the most fun one, in theory. So let's start with kids in business. It's around Christmas time now. If you're hearing this later, if we film this around Christmas time, there's a tree behind us. Let's start with kids in the business and that tax strategy.
Okay, so most people do not know that your kids are able to help you in your business, and that is a tax write-off and not something that we actually have to run through like a payroll process to pay. You can actually just give them straight cash and get a tax write-off for them helping. Obviously, they need to be doing bona fide business stuff to help you. We're not going to call it chores, but things that they could do to help out. And I think it's good just from a parenting point of view to get them involved, get them understanding at a very early age that working is important. But overall, it can be a nice little tax strategy. You have to have them do things that are business related and then pay them a reasonable amount per hour. And that could be across the board. It's not minimum wage, but it's not $500 an hour either. So it's one of those things where we have to come up with something that is reasonable. And obviously we'll be aggressive in that area, but it's kind of as vague as it sounds. Have them do something in the business that helps, some sort of task, and then we can pay them to do it. I mean, you're going to pay for soccer, you're going to pay for cleats, you're going to pay for all of that stuff anyways. So why not pay them and then have them go pay for those things? And a lot of parenting things that you teach in there as well. But if you able to do all of that and document it, obviously that's key. Hey, they worked one weekend with me for 8 hours. I paid them this, whatever the case may be. That sort of thing. They can definitely help you in the business, and it's a nice little tax write-off for money you're already going to give them anyway.
Right. Is it simple as like them stacking boxes or filling orders? Like those are relatively easy things that most children can do. Now, we're not talking about infants. I don't think you can really spin an infant doing a lot of work in the business. Although if you tied a broom to them and let them crawl, that's cleaning.
Okay.
Right?
I mean, kind of.
Kinda.
Yeah, anything that could help you in your business. That could be cleaning an office. That could be organizing. That could be, mailing stuff out, that sort of thing. Anything that could help you in the business. There's not a specific list that you can or cannot do. It's just that, can't have them take out the trash at home and then we're calling that a business deduction. That's obviously not what the goal is.
Yeah. A good example I do it with my boys is then we'll take that money and I'll allow them to put it into an investment account, right? And I don't really let them pick all the stocks, but they've picked Disney because we watch a lot of Disney. They're huge into Jurassic World, so we picked up that. And so they're able to learn how to work, learn how to save, and then also understand that the market goes up and down a lot. Mm-hmm. Right now it's been down. Yeah. But they get that understanding. So it's a huge teaching moment for parents, I believe, but also, like you said, we pay for soccer anyway. Make them come work. They can go buy those cleats.
Yep, exactly.
It's as simple as that.
Yep.
Love it. Let's get into board retreats. I think this is kind of a misconception too, of people understanding like you don't have to have like a board meeting in a stuffy boardroom in your office. There's other things that can be done. So talk around the whole board idea, because most people think like I have to have like 12 people on my board. They have to be all over the place, right? Talk through the whole board concept.
Excellent.
From a tax standpoint, by the way. I want you guys to know that.
Sure. If you think about it, if you've ever like heard of another company like Disney or Jurassic Park that you name off, all of those have a board of directors. All of those companies will go to a different location, event, have them in, partial fun, partial business, that sort of thing. Just because you're not a huge business does not mean that you are not afforded all of the same opportunities and strategies. So what we do is we'll draft up a legal board document where we will list out all of the board members, and those board members might be all the intermediate family. And so every year we'll do that board retreat where we go to an off-site location, and that could be any off-site location anywhere. It doesn't matter. That's not a criteria. But you have legit meetings, sit down, discuss the family business, discuss what's going on in it. Some teaching moments for maybe some of the kids, maybe between spouses, a little bit more of a dynamic conversation there, and some strategic planning as well goes into it. Again, you can talk about anything in these board meetings. There's not a set criteria, but if everything done right, set up, documented, you can get a whole trip could be essentially a business write-off. We're not going to do the water park tickets that we did for one day, but the hotel for all of the days, the travel costs for all of the days, meals in between. You can even have happy hours and things like that with the board. But you can really, if structured right, you can get by with being able to write off an entire, not trip, but you were there to do business, and the little bit of personal stuff that you had on the front end, the back end, and maybe at night. That doesn't kill the whole idea. That's just maybe not something that we claim. But, the majority of, I guess, travel costs are going to come in the hotel, the airfare, the meals, that sort of thing. And all of those things can be included. We just have to come up with proper documentation and have a plan for executing some board meetings during the time that we're there.
Is there a time limit constraint? Can I go for 6 months?
I don't exactly think that's going to get over. Then we're almost relocating. That's a whole different ball game.
That's fair. So you have a business. Most families take annual trips anyway. It's a very easy way to not deduct 100%, but to actually utilize your business. Because, you're going to talk about business. As a business owner myself, no matter where we go, business is to be had. Structure it, notate it, and it could be some type of deduction, right?
Absolutely.
Awesome. All right, well, let's get into the fun one. I'm a golfer. A lot of golfers out there. Those who follow our other podcasts are golfers. A lot of business owners love to golf. So the word Augusta means something to them. Not the rest of the world. Not at all. Did you know about Augusta before the strategy? Did you know anything what Augusta means?
I think I had heard about it once.
Okay.
The big old golf tournament.
Yeah, it was a big old golf tournament. Yeah,
happens once a year.
Yeah, down the south. Yeah, it's may or may not be one of the best ever, the Masters. So, Augusta. Talk us through that. Now, we've done a little clip before, but talk us through that strategy and talk us through an example of the last time you used that, although you use it all the time.
I do use it frequently. So Augusta strategy, like he said, literally labeled after the Augusta Golf Tournament. That was put into place so that owners with houses on that tournament could rent out their house for 14 days tax-free and would not have to report it. So that was inserted into our tax code, which means that anybody can rent out any venue for 14 days tax-free throughout the year, and that could be your house. So the strategy that we implement is it's an event. If you're going to use your house as an event venue, and you got to get kind of comparative sales. You can't just say, well, I'm going to rent out my house to myself for $2,000 a day.
Right. Yeah.
If that's not comparable to where you would go, then that's not something that we can do. So how the strategy works is we're going to set a venue that is going to be your house. We're going to look at the event and then say, what is a comparable event price for something? For a group of 10 people, I called over to the Sheraton and said, what would a room be for the day? And I believe it got $600 for room to rent for the day for 10 people. So that's typically a baseline for what we use. That's kind of that small group day approach. And then we suggest to our clients, document every day that you have the team over or you have a group of clients over, what you discussed. It needs to be a business-oriented function. Just as if you were taking on that room and you were standing up giving a presentation, that's the idea behind it. Just having a buddy or two over while you guys watch the game or whatever and calling that an event day is not what we're going for. It is legit. You had the team over. You had small group of clients over. You went over some stuff. Obviously, there's a lot of marketing and networking is all part of that sort of event type thing. But if that's all done right, documented correctly, we can write off a daily rate for however many days that you might do that, comparable to what you would have paid to another event place in the area.
And it doesn't have to be 14 in a row.
Yep.
I mean, you can pocket these throughout the year. Really define your events around that. For business owners that have pools, maybe it's a great idea.
Fabulous idea,
right? The rest of everyone else, it's obviously an easy way to do that. There's a lot of business owners out there that they do it anyway. They host events, whether it's product sell or just having people over. Think about it. If you have a good home, instead of going out and paying a hotel or wherever you're going, that's yours, right? So think about it a little differently in that regard for the Augusta strategy. So what you're saying though is we love Hawaii. That's where we would typically have those events. So I can't use those numbers. I can't just use the $2,000 a day of the giant house that we want to rent out as the. It's not comparable.
I don't think it's going to be a comparable for the area.
No. You mean the snowy, horrific place that we live in that's always cold compared to the nice palm trees and beach is not.
We'll have to move somewhere over there closer and then use that venue.
Fair. Okay, that's fair. Awesome. Well, definitely appreciate your time. This is a quick rundown. We want to get these 30, maybe 34, 45 minutes. We're going to do these once a quarter, twice a quarter for certain strategies that pop up. We do have, going into 2023, we've got new contribution limits that we'll speak about. I don't think really anything's changed too much in the tax code from year to year for the first time in it feels like ever. But, we'll hit upon those as much as possible, and then come here with some more ideas, because there's a lot more strategies. There's a ton. His brain operates all the time. You should see me on the weekends just going, oh, that's a sweet strategy. How the hell did you come up with that? It's from his group. So appreciate it. Like, subscribe, follow, share. Come check out our sponsors at blackmammoth.com, trinityif.com, Enan.
The preceding program was sponsored by Black Mammoth. Any awards, rankings, or recognition by unaffiliated third parties or publications are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Black Mammoth. Information regarding specific awards, rankings, or recognitions is available on the Black Mammoth website, www.blackmammoth.com. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions and securities, or the rendering of personalized investment advice due to various factors including changing market conditions. The information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up-to-date, Black Mammoth do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature and is provided for informational purposes only and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Past performance is not indicative of future results.